Hi there. So today's headline news is that a further 120,000 savers have been added to the list of those that are going to be paying tax on their savings this tax year compared to last year. And the reason why this is important is because it is happening much sooner than we expected it to. So what is it that's behind the story? Well, essentially we've got two factors. The first factor is that the tax-free savings threshold has been frozen for many years now. It hasn't moved for over 9 years. And that means that with inflation pushing up people's incomes, more and more people are being dragged into paying tax on their savings because they are simply earning more, and therefore the threshold is now being breached. Previously, it used to be the case that only higher earners paid tax on their savings. However, more recently, even people on quite modest incomes are now having to pay tax on some of their savings if they re-earning interest above a certain level. Now, as you know, I don't usually cover breaking news on my channel, but this story is important because I wanted to share something that is going to impact pretty much everybody. Eventually, even if you don't save, even if you don't earn any interest, everyone will be impacted when we get to a point where the state pension is going to start being taxed. Now, if you're somebody that saves money, then I would definitely encourage you to seek out some form of tax-free wrapper. So things such as ISAs, pensions, etc. So that way you can build up your savings without them being taxed. Because right now, whilst we do still have these tax-free allowances, it is absolutely vital that we use them. Otherwise, HMRC, the tax man, he's coming for us. And we can see in today's report that the taxman, he's already here. He's already knocking on our doors, and he's saying, hey, you need to pay me some money. So this is the second time that I've covered this topic. The first time that I covered this topic, I spoke about how this is essentially the new property ladder. Right now, people that want to buy their own home, they're struggling because house prices are too expensive, mortgages are too expensive. But people in the past also had a difficult time getting on the property ladder. Why? Because they had to save for a deposit. And saving for a deposit was really hard because they didn't have the benefits that we have now. They didn't have things like Help to Buy or the Lifetime ISA, for example, but what they did have was better access to cheap savings accounts. The difference between then and now is that banks and building societies actually paid good interest. You could go and save your money and actually earn a return on it. Whereas right now, if you're going to save your money and keep it in a bank or a building society, you're likely to lose money to inflation. And the key thing to remember here is that historically, we expect our cash to grow in value. Cash should be safe, right? If we put cash in a bank, in a building society, we expect that cash to be there when we need it and to be worth more rather than less. However, with inflation running rampant, we're now in a situation where we're losing money. If we put money in a bank, we put money in a building society, we actually expect that money to have more purchasing power. And if you've got cash sitting in a bank account, it's losing value by the day. Therefore, you need to invest that money. That means putting it in stocks, putting it in shares, putting it in assets that are going to grow in value faster than inflation. Because otherwise, if you just keep your money in a bank, in a building society, year upon year, you're going to find yourself with less money than you started with. As mentioned, I previously spoke about this topic, but what I want to talk about now is what we can do about it. What options are available to us? And the first thing that I would recommend doing is looking at some sort of cash ISA, particularly if you're on a low income. So if you're somebody that earns below £100,000 per year, then you can look at a cash ISA. With a cash ISA, you're going to get a better return than with a bank or a building society, and it is completely tax-free. Whatever money you earn through that cash ISA, you don't have to pay any tax on it. The next thing to consider is whether you're actually eligible for junior ISAs. Now, junior ISAs work in the same way as cash ISAs, except they're for children. However, you might be surprised to know that you can actually open a junior ISA if you have children, stepchildren, or grandchildren, or even if you're a child. So, if your parents have passed away, you can open a junior ISA in your own name and you can put money into it. And whatever money goes into that junior ISA is locked away until the child is 18 years old. But because it's locked away and it's invested, hopefully over that period of time, that money is going to grow, and by the time the child reaches 18, they're going to have a nice lump sum. The third option is to look at investing your money. There are many different ways you can invest your money. Obviously, there's the stock market, but there's also, fine art, wine, property. But personally, I'm a fan of ETFs. An ETF is basically a basket of shares that trades on the stock market. So instead of trying to pick individual stocks, you're just buying a basket, and there are plenty of ETFs out there. You can buy one that tracks the S&P 500, the FTSE 100, the entire global stock market. And with an ETF, you're going to get some great diversification. So before we wrap up today's video, I just wanted to quickly say that. And finally, the fourth option is to spend the money. I know this is probably not the most popular option for most people, but if you've got money saved up, you're not really using it for anything, then it might be the case that you just spend the money. Treat yourself. Buy something that you've always wanted to buy. Buy something that's going to add value to your life. And I know times are difficult, but sometimes you've got to spend money to make money. Maybe there's an opportunity for you to take a risk, invest that money in yourself, learn a new skill, take on a new business opportunity. Sometimes it takes money to make money, and if you're sitting on the sidelines, you've got cash, but you're not really using it, then maybe it's time to either invest it or spend it. And if you haven't already seen it, I highly recommend that you watch my recent video about the new property ladder. But apart from that, hope you enjoyed today's video and see you again soon.